Okay, let's start with Nasdaq on the daily time frame. As you can see on the daily time frame, you need to, as much as everybody knows that Nasdaq is always buying, you need to know what your channel is. Do you understand why you're trading Nas? You need to know what channel you're trading in. Because look here, if you could say, okay, Nas is always buying, the drops are not always in the same place. As you can see, the drops are not always in the exact same place. So if you're saying, okay, no, we're gonna only hold this channel from here to here, then this one would have definitely messed you up. So you need to know at the period that you're in, what channel are you actually using on the daily time frame. As you can see with this channel, we've been using this channel since, let's just say around about September. We've been using this channel since September. We've had almost 5 touches on this channel. As you can see, touch 1, touch 2, touch 3, touch 4, touch 5, meaning this is our channel for now, until we actually break this channel and probably go downwards, or it creates another smaller channel that will shift it up differently. It could probably push up here and then drop somewhere here and then start creating a new channel, up, down, up, down, up, down, moving to the other side. Because obviously this channel will not stay relevant forever. It's probably going to create a different channel sooner or later. So now when we go deeper into the smaller time frames, as you can see, we have what we call here the quarter point theory. All these lines that you've been seeing, it's part of a theory called the quarter point theory. There's the theory that the banks always move price to whole numbers, right? The banks always move price to whole numbers. As you can see, sometimes it does work, sometimes it probably wouldn't work, but most of the time it does actually work. I could say a good 70% of the time it actually works. So as you can see here, look at the rejections here on 13,400 on this line specifically. There was a buy here and a buy here, a sell here and a sell here and a buy here, which is still exactly at the exact same price, which was 13,400, the exact same price. This price was once support, then resistance, then support again. You understand? So now when you're trading the quarter point theory, you're always looking for the price that is most active, basically, in terms of reversals and all those things. So now obviously when we come here at the top, you can easily see there was a rejection here, a sell, then a sell, then a sell, which was at the 14,100. There was a sell, sell, sell. It didn't get all the way to the 100. It stopped at around about, let's say, 14,090, right? But it was close enough, I guess. That's why I say not always it'll stop at that certain price, but it's close enough to the price. So now, when it comes to knowing where you are, you need to always draw your supply zone and your demand zone, right? You need to know, okay, if I came from supply, the next time it's going somewhere, it'll be demand, right? So now there's obviously smaller supply and demand zones in the market. Obviously there's the overall one that you see on the daily time frame, and then there's the smaller supply and demand zones on the on the smaller time frames. So basically like this, let's say at some point before this bottom part was created here and this was created, this was the only demand. After it reversed here, this was demand, right? It came and it rejected here, creating a supply zone. But originally we had this supply zone at the top here, but now we have this supply zone at the bottom here. So at some point it came, touched the supply zone, came back to the demand zone, broke it, went down, went down, went down, created another demand zone, so making this a supply zone as well. So demand zone. So from this demand zone, it hit this bottom part here, went back to the supply zone, rejected, pushed down, went back to the supply zone again, rejected, pushed back down, all the way to the bottom demand zone. From this demand zone, we're supposed to go back to the supply zone. It actually broke the supply zone and went above. As you can see, this was recent. This is the recent week that we're in right now. It went to this, it broke the supply zone, right? And then making it a demand zone. So as you can see, touch here, buy, sell, when it was actually acting as a supply or resistance. Let's just say resistance, the term that we all know, resistance. Then making it, what's this? a support again. So it broke, made the support, now it pushed back to the previous resistance or supply, and then now it rejected today. As you can see, it rejected the zone here. That's why we always mark up these zones which have, like, let's just say, strong rejections basically. Now if you see a market moving up very strongly, then all of a sudden it just breaks and goes down, you must always mark up those zones. Like, I mean, those sharp rejections, they might come to play again. And then I always mark up, let's say, W's and M's, and then I always mark up the zones where I saw like very strong reversals, because it could come to play again, just like you can see here. As you can see, it's acting as a resistance, so I'm assuming maybe it could probably push up to this level or push back here to this support here, and then carry on again, then break the zone and probably come and reject above this, and then come and test that high that was created before, which is the supply that was there, the supply zone that was there, the top one. Come and test it again, and maybe if we can break it, making it a demand, and then creating a new area for us to play with. But for now, this is the zone that we're in. So now everybody wanted to know about that thing I was talking about, how to make profits without the 3:30 news event. Everybody just knows 3:30 news event. Everyone wants to trade 3:30. Everyone is always on that tip of, okay, 3:30 we're going to buy Nasdaq. 3:30 we're going to buy Nasdaq, because that's what's being taught most of the time. At 3:30 go and buy Nasdaq. Whereas people with small accounts, it's killing them, because that volatility spikes down once your account gone and then spikes back up. You know, that volatility is killing a lot of people's accounts. So there's times in the market when you can actually trade it while it's moving slowly without all the volatility. There are times in the market when you can trade like that. So let's just go to the 15-minute time frame so I can show you this. So now, looking at this, to most of you I explained it yesterday, but I will explain it again. As you can see, this is the Asian session, right? Asian session is from midnight until 8 a.m. Midnight till 8 a.m. So now, let's say you can see these three dotted lines, the top dotted lines, the middle dotted lines, the bottom dotted lines. So let's say the Asian session ends, right? Let's say when the Asian session ends, and it ends above the middle line, you can buy and then put your stop loss at the bottom here, and probably push up, then you make your small profits and close. So now let me explain this. From 37,000, right, to 36,000, right? Okay, sorry, not 37,000, 13,700 to 13,600. Using varsity markets or trade 245 is around about 1,000 rand. Using XM, Pepperstone, Globex, it's around about 200 rand, from 13,700 to 13,600. What I've realized with NAS is that it moves in hundreds. Let me actually go back to the 1 hour time frame. As you can see, my quarter point theory is marked up in hundreds. So with NAS, it moves in hundreds. As you can see, that's where the rejections appear. So I would go from 13,000, 13,100, 13,200, 13,300, 13,400, 13,500. That's how I mark up my charts. So now, as you can see, the rejections always take place at these whole numbers, as you can see, which is those quarter point theory. That's the quarter point theory. It always rejects at whole numbers. If you look at it properly, let me just do this. As you can see, at whole numbers, at some point it was only rejecting at the 14,100, like I said before. Then it's when it actually rejected that time, it rejected at the 13,000, but more of, let's just say, the 29,900, the 12,000, sorry, 12,900 and the 13,000. So either between 12,900, that's where we actually see the actual rejection, but it looks like it actually rejected on the 13,000, but it's fine. Let's go to what I was trying to explain again on the 15-minute time frame. So look at this. Let's go to the front. Okay, as you can see here, when we end at this middle line, let's say we exit the Asian session and we're above this middle line, it buys, right? I'm going to show you how many times this repeats, and if it ends below this session, and let's say price is below this middle line, it'll probably sell. Let me show you how many times this actually plays out in the Asian session. And this is easy money. Obviously, it won't work out all the time, but if you can win at least 4 or 3 out of 5 times, that's a lot of money. So fine, let's go. As you can see, the first time we did it, the day before, as you can see, it ended above the middle line. There's the top, bottom, middle line. You could have ended a buy here after the Asian session above the middle line. You could have easily entered a buy, put your stop loss here at the bottom, buy, done. And then there's this thing that it does sometimes where it'll probably reject at this top line 3 times, meaning it'll sell. And then sometimes it'll reject at this bottom line 3 times, meaning it'll buy, right? Sharp. So now let's go deeper. As you can see, rejection on the same line, top line. So it's sold. You can easily take your profit just right here. You could have sold from here and taken your profit at this line right here. Easy. Now look at this one. Top, right, middle, the lower line. After the Asian sessions ended during the London session, it was below this middle line, so it continued to sell. Top, middle, lower. It ended above. When the Asian session ended into the London session, it was above this middle line, so you could have easily bought. So it's easy to say, okay, the high of the day, the low of the day, and then just the middle line. This is the start of the day, high and low. Okay, so now here's the high of the day again, low of the day, the middle. It ended when the session ended, the Asian session ended into the London session. As you can see, easily it was below, so you could have sold. High of the day, low of the day, middle. After the Asian session ended, it was above, easily bought. Put your stop loss right here, right? So from the middle, your stop loss would be right here. People using XM, let's just say people using XM, you wouldn't be losing much, but people using varsity markets, I do understand sometimes that it is kind of a lot. So don't always enter too many entries. Don't enter like way too many, because you'd rather build your account first, and then you can risk later after you've made a lump sum of profit and withdrawn, and then now you can start playing with like 2 entries at a time here, putting your stop loss here. Then maybe when you lose, you'd easily be losing, let's say, a good 400 rand from here to here, a good 400 rand on trade 245 for varsity markets. But people using XM, you wouldn't be losing much here, because it's not as volatile as trade 245 or varsity markets. As you can see here, you wouldn't understand what to do, but it was clear to see that there was a W pattern here, and then it was clear to see at the top there was a smaller M pattern here, so you could have easily sold and then went for the buy. Now let's go back to the session here. You can see when the session ended, when it pulled up and pulled to the top, so you could have waited first before entering anything. So you could have waited first. You could have, most people would have bought, and then if you bought from this middle line, easily made the profit from here, because obviously at some point it was at the above the middle line after the session ended into the London session, and then made your profits from here. But as you can see, you'd have easily seen a rejection here and a rejection here, and then a rejection below price of 13,300, making it lower than the other rejection. So obviously it was going to easily sell. So now here's other times when it was easy. So after the Asian session ended, it was below the middle line. Here is the high of the day, low of the day. Could have easily sold, right? Easily sold, because we below this one. Then taking profits like maybe somewhere here or here, from this middle line from here to here. On XM, it doesn't seem like a lot of money, but if you can do this consistently every day, it's a lot. For people for varsity markets, they'll probably be enjoying this, just doing this every day, easily almost bagging like 500 to 600 rand every morning, repeating the same process. Obviously you're not going to win every morning, but majority of those mornings you're going to win. As you can see, same thing again, high, low, the middle. When the session ended, the Asian session ended into the London session, you could have sold below the middle line, put your stop loss at that high up there, and then take your profits. Do you understand? Look at it. And it repeats this a lot of the time. So now let's just go back to understanding how this would also work. So obviously, I would have always been looking for it to end. Every session, I'd be looking for it to end above the middle line, because why? We came, let me do this, sorry. We came from the bottom, okay, let me see something, sorry. We came from the bottom of this trend. So I'm always looking for it to end. I'm looking for it to always be above the middle of that Asian session. So I'm gonna keep buying, buying until it makes a new high. Do you understand? But then this comes with also understanding where you are in the market. You need to understand where you are. It'll obviously work more for you if you know where you're actually going. If you come from a low, right, and it always ends at the middle above, then you know buying is safe. If you come from a high and it ends below the middle line, right, of that Asian session, you know you're definitely gonna make money because we're going into a selling trend. So now we end up buying trend, meaning every time it gave you a mil, it was easy to buy, just like today. Look at it today. Today, okay, let's just say, yeah, on the 25th of May, look at it. Up the Asian session, it was above the middle line. You could have easily bought, taken your profit up here, and exited. Then, because we knew we end up buying trend. For now, we end up buying trend. We're coming back from the low that we had here. We're coming from this low. So obviously, above the middle line, we're definitely going in. We're trusting that entry, and we're going in. You understand? That's how we're moving with it. But as you can see, just always know what channel you're in. When you look at NAS, know what channel you're in, and then the rest that follows will probably be simple. And obviously, the people in my group, you have indicators that tell you how is the trend actually moving. There's a specific indicator that we have that just tells us, okay, this trend is in a buy trend, this trend is in a selling trend. It's easy to see where we're actually going in the market. But as you can see for now, if you use that trading strategy, if you're afraid to trade 330, because obviously you don't really need to trade 330. You don't really need to trade 330. It's too hyped up, man. Especially if you're a beginner. No, man. Trading 330 will blow many of your accounts, whereas there's so many other sessions in the market where Nasdaq moves so slowly that as a beginner you can easily grow your account with 100 rand, 200 rand at a time, 50 rand. Yeah, people, like, don't let people confuse you. Don't let people confuse you. A lot of people will post 20,000, 10,000. Now you feel like you also need to fit into that lifestyle. You don't need to fit into that lifestyle. They also started by taking small profits, like $1, $2, $3, $4 profits at a time. So you don't need to be in a rush to do the same thing. You can easily just take your 100 rand a day from NAS and leave it. At some point, it's going to become a lot of money, and then you can start taking 200 a day, 300 a day, 400 a day. Just take your time. You don't need to become a millionaire today, tomorrow. You don't need to have thousands by tomorrow. Just take your time with it. Take the small profits and dig the market. Yes, and just repeat the same process over and over again until you actually have enough money to say that, okay, you can take risks like the bigger people in the market. Those people have been in the market for 3 years, 4 years now. You think you're gonna do it in less than a month? No, that's not gonna happen. You think you're gonna do it in 2 months? No, that's not gonna happen. They took a while. Most traders that I know of started in 2019, and now when you look at them, they're making big money. That's a lot of years back till today. It kind of makes sense why they're making the money that they're making today. But yeah, as you can see, you need to always chart up your time frame like this. Like I already told you how to draw in these levels. I always look for W's and M's, and then points in the market where the market just reversed sharply, it just dropped sharply. Those are the type of levels I'm looking into to draw up these levels. And then when it comes to price, you're always looking for, okay, at what price does the market react the most? And obviously, oh yeah, another thing, most important thing before I finish. Nasdaq, right? Nah, it can move through, let's say, 5 price levels or 6 at most when the market is very volatile. At most 6. At most, that's it, 6. So meaning from 13,800, 13,700, 13,600, 500, 400, and then it'll stop at 300. At most, on a very volatile day. Very volatile day. You can go through just 6 of them. 6. Sometimes it stops at just 5. But on a normal day, like let's say where the market is not as volatile, right, during that news event or whatever the day is, it'll probably go through maybe 3 to 4. We can say 3 to 4 levels, so meaning from 13,000 all the way to 13,400. That's it on a normal day, or maybe 13,000 to 13,300 on a normal day. That's all it does. On a very slow day, such as the 25th of May, it literally only played through, let's say, 2. That's it. So from 13,600, it played all the way to 13,800. Done. That's a very slow day. Obviously, you need to go and check your fundamentals to see how your day is gonna be. You need to check how your day is gonna be. If it's gonna be a slow day, then you get movements like this, very slow. If it's gonna be a very volatile fundamental day, it's gonna look like this. It's gonna look like this. On a simpler day, it'll probably just look like this. A normal day, just look like this. 3 movements, 3 candles, done. For the rest of the day, after that, it'll start consolidating and start playing in the same position for a while until the day ends, and then start the next day. That's one thing I've learned from that. Like this. This is just a simple, slow day. Just 2 zones when it plays it. Just 2 zones. Done. Easily done. You understand? So if you can know how volatile the event is, you should know. So if you hear no, Nas has lost all of the most of the stocks have dropped in price, you should know, okay, probably on that day, Nas might probably drop more than 6 price levels. More than 6 price levels. 6, I mean, not more. 5 to 6 price levels. 5 to 6 price levels. If it's just a normal day and you hear, okay, let's say the stock market's gained some investments, right? You can just say an easy 3 to 4 levels. 3 to 4 price levels. 3 to 4 price levels. If you don't really hear anything on the news and there's nothing going on, a slow day, just only expect 2 price levels. 2 price levels, and that's done. Do you understand? And learn to close profits when you see this thing is not gonna go your way. And learn to mark up your charts and keep the charts like that to see, okay, at which level, what levels are we chasing? Do you understand? You need to know what levels the market is chasing. It's always chasing something. It's always chasing something. It's not just going to sell and go nowhere. No, it's chasing something. You understand? So you need to understand when you draw in your levels, you need to understand, okay, what is it chasing? And now that I explained to you that, okay, if you see a highly volatile event, either if it's buying or selling, it can only go through 6 or 5 price levels in a day. Otherwise, you probably won't see more than that. And I think that's it for this session, but obviously I would probably have more to explain after your questions. Whatever questions you have, I'll explain, make more videos to explain what's going on. But the Asian session thing is for people who want to make slow money and slowly build their accounts, man, without rushing with the process of going into the very volatile event of 330. Like that whole 330 thing, man, it's not needed, guys. Just build your accounts slowly. Just build your accounts slowly. Take your time. Like honestly, just take your time and build your account slowly. And then when you get to the level that these giants are on, then you can like entertain the whole 330 thing. But for now, there are better times to build your accounts. Because think about this. Look at this Asian session. It only traded between 2 price levels, which was between 13,700 and 13,600. You could have easily just bought, sold, make small money. Build your 50 rand, 30 rand, 50 rand, 50 rand, 30 rand at a time. Easily. But okay, it's fine. No stress, man. Let's end the session with that. pairs, I'll explain them another time.